Hello there, I hope you're doing well. Today I want to talk about stacked true open, which is also our advanced true opens. Two true opens, one order, extreme discount or extreme premium. When both are validated by a cracking correlation, the setup is high probability as it gets. The logic. One true open tells you price is at a time-based discount or premium. Two stacked true opens in the correct order tells you price is an extreme. The cycle you're viewing and the one direction above it are both saying the same thing. I know this might sound confusing. Maybe you don't know what discount premium is. We will get in all of that. I'll make extra videos. Guys, this whole, whatever you want to call it, playlist, lecture, mentorship, whatever you want to say, um, I'll break down everything. Trust me, whatever you have, whatever question you have, I'll be answering all of them. And yeah, this might sound complicated, but just understand, take a screenshot of this, study them, and I'll get more in depth of this. Bullish and bearish stack rules. First, when it's bullish, lower time frame true open must sit below the higher time frame true opens. For example, daily 90. Oh yeah, like he says. Example, true session open 90-minute below the day true open daily, right? Daily, um, such as midnight. Price dropping below equals extreme time-based discount. That means if the price is high, let me draw something like this. Let's say the black. Let's say that the price is at this high, right? Something like this, right? Our true open, let's say somewhere here. Our day, midnight open, let's say true day open, and whatever, true New York open, right? Etc. Right? It could be also monthly, weekly, whatever. It's bearish. The more the better, right? All right. What are we expecting is our bias will be mostly bearish, not only because of the true open, but also because maybe in a premium discount array, such as imbalance, maybe we're in a fair value gap, right? The market we're waiting to trade in, then maybe find our entry, maybe within Chinese state of delivery, etc. on the targeted lows, either the accumulation, the Asia, the liquidity, whatever, or the true open times. Yeah, that is best. Look for any bullish cracking correlation from below both levels. Exactly. Also, um, add cracking correlation also to it. And then when it's bearish, look into lower time frame true open must sit above the higher time frame true opens. Same thing, but vice versa, right? Let's say price is ranging, right? Um, let's say our true open right here, right? Same thing with New York. You get the idea. New York open or midnight open, right? Throughout the time. Wow, man. I hope you get it. This looks interesting. All right, guys. Let's say price is here. What are we waiting for? Let's say not only because of the true opens we're bullish for the day, but also because we trade, let's say we check out the sell side. We're in a PD array, right? Such as breaker block, mitigation block, whatever it is, right? Order block, whatever you're trading. And then, but the most important is time, of course, right? And then price. And yeah, your bias will be bullish for the day, etc. You target somewhere here. Yeah. Um, guys, basically same thing. Price pushes above equals extreme time-based premium. Look for any bearish cracking correlation for above both levels. Yeah, cracking correlation, SMT, of course. You guys know, without SMT, I do not answer. All right, we got cycles here, cycle viewing, and stack with true opens over here. Now, first, we got micro, such as 1 minute, right? Or lower. 90-minute, you're looking at 5 minutes, right? Daily is the 15 minutes time frame, weekly to 1 hour time frame, and then we got this true open, so to say, 90-minute true open, session open, daily true day open, weekly true week open, monthly true month open. You get the idea. Now you know what I do? You know what I do in order to have more confirmation. What I do, I make it so easy. For example, I add all of this: monthly open, weekly open, daily open, 90 minutes, even true micro session open if I'm trading on micros. Guys, be aware, these are important. Have this on your chart, annotate. If it's boring, look for any indicator. And yeah, important notes. First, stacked opens are not required. A single true open manipulation can be enough, but stacked probability significantly increases. What this means is we do not, we don't have to wait till the market creates a stack open, right? Like stack true opens, let's say New York open, daily open, or monthly open are together within a candle close body. No, we don't have to. Like, yeah, there are gonna be some days, yeah, we're lucky, we do get that, but some days not, right? What is important is simply your bias and your entry. Second, only one asset needs to form the cracking correlation below both stacks open, not all three in the triad. For example, in Dow Jones, Nasdaq, ES, right? Only one can create cracking correlation, that's enough. Third, after manipulation below stack open, you can still look for longs above both levels on retests. What this simply means is you can play back to back. This is a little interesting. I'll get into depth what this simply is. Now, some examples here. Barrier scenario. Let's say that we're ranging and true session open opens right here, right? Let's say this is our Q3 New York session, all right? And then our true open is right there. Now, this is a stack true open. This is a beautiful example. Now, let's say the market open, let's say somewhere here is the market open. We took out this high, right? We'll go into lower time frame, such as 1 minute, right? We probably see a change in state of delivery and then price ranging higher, target the lows. Something like this. Just why this looks interesting. And then you target the lows. You get the idea. And now for the bullish scenario is kind of same thing, guys. Let's say we're ranging. Check out this low. What are we waiting for? Is there any clean entry? Are we trading in any of these gaps? No. You have to zoom into lower time frame, guys. All right. Lower time frame. Let's say we're somewhere here. Let's say market open, whatever session you're trading at. All right. We're open. Pay attention to this. If not, then this, because this is where we form our chain of state, market structure shift. Probably find your entry right here. Target the highs, whatever the buy side liquidity you have, right? You get the idea. The clean setup. Stack opens plus sequential SMT equals one of the cleanest, most repeatable setups in quarterly theory. If you have this, well, it's a beautiful, and you have to study the charts and also have your true opens, annotate your true opens before the market's open. Come like 30 minutes, 15 minutes, whatever time, 1 hour before the market open, and annotate all your stack opens. If you're lazy, then just have a, just there are some indicators which can help you annotate for you. But it's better to do yourself because you study more. And then price at extreme discount, cracks in correlation confirming the move is almost inevitable. Yeah, man. I mean, if we're really deep in discount, we're waiting for something. The price have to break this, right? Probably market open will probably manipulate this low, which is the power of three, and then we manipulate to higher. Accumulation, manipulation, distribution. This is beautiful. And what confirms is the bias way better is when we have sequential SMT or any SMT, and then our true opens are above here. This is wow. For those who have made it this far, you have what it takes. Trust me. Just keep on going. Now, this is a beautiful example. This can be anything, any market, any stock, whatever it is. And everything's fractal, where it can be also time in a minute chart, it can be daily charts, guys, everything's fractal. This is a beautiful example of Q1, right? Like we accumulate here. As you can see, this session we accumulate, and then we manipulate. Like we took out this high, right? We took out this high. What are we expecting after manipulation? Of course, distribution. That is our Q3. Beautiful. And then what makes this buy stronger? The market change state, all right, or market structure shift. Market came down. You see these gaps? The wick, look, the body closed below these gaps, all right? Little gem. Like our bias is bearish now. Now, what are we expecting? We're expecting to trade into this gap, All right, this gap. Why is this? Look at PD arrays, man. What is this? What is this? So break a block, bearish break a block. Extend that beautiful market taps in. See the body, something like that. And then this is our true open, of course. We look, we wick. Well, for this, let me show you something, guys. Let me show you. Why is this gap important? Why was this gap important? Why not this? Okay, if you look at true New York open, all right, at 7:30. If you look at that, we closed a body below this true open. Extend that, we close it below it. What are we, why is this so strong, this candle, this CB or inversion fair value gap? We have to trace back in, and then in order to trace lower into another PDRA 15-minute time frame fair value gap. And this is only not enough. What makes it better is when we have cracking correlation plus a something inversion fair value or fair value, whatever it is out there. Hope you got something from these guys. Let me know what your thoughts are. Leave a like, subscribe. See you guys next time. Be safe.